Hey everybody, it's Eric with Low VA Rates wearing my Red Friday t-shirt. If you want one of your own, all you have to do is go in the comments below. We love comments and interaction. Ask us, how do I get one of those? But if you support the military, if you love the military, you want one of these. Trust me, and we want to send you one. By the way, down at the bottom right of your screen, if you're watching this on YouTube, you'll see a subscribe button. Click that, become a subscriber. That way you're aware of all of the new content that we're gonna spread, and we're gonna spread the love and the joy and the education about these VA loans every week, sometimes numerous times a week. That's how you'll be notified. Today we're gonna talk about a change we've talked about in the past, but I wanna really reiterate it right now, and that is recoup rules for VA refinances, okay? So when you're thinking recoup, what in the world does recoup mean? Well, we've got videos out there about closing costs. Nobody likes closing costs, we know that. The VA about a year and a half ago, I don't want to get too strict on the dates right now because you guys probably don't care a ton, but about a year and a half ago, the VA came out with 3 pretty substantial changes to all of their refinance programs. Cash out and interest rate reduction refinance loan, or the IRRRL or streamline. The first of those 3 was the VA, and we applaud them for wanting to do this, wanted to protect veterans, number one, from unscrupulous lenders, they're out there, but also from themselves. Sometimes we need to protect ourselves from ourselves, if you know what I mean. And what the VA found was some loans had way too many closing costs when compared to the minimal savings. For example, let's just use this. Let's say you had $10,000 in closing costs and you were only saving $10 a month, okay? This is extreme. If you took 10,000 divided by 10, I'm not a math genius, but I can tell you this, it would take you 1,000 months to recoup your closing costs. Well, nobody's going to be in the same mortgage for 1,000 months. A 30-year loan is 360 months. So you're talking, that's over 90 years, I think. That's not going to work. Now, that's an extreme example, but it's a good way to drive home what the VA was doing. And this is one of those questions I'm going to ask and I'm going to pause. I know I'm not going to hear your answers, but I want you to say it out loud. Do you know what the VA's recoup rule is? It's 36 months. If you said that, go ahead and pat yourself on the back. 36 months. Okay, that is 3 years or less. Okay, so one of the first things you need to realize is if you're getting a VA loan, a streamline, I need to be careful here. The 36 months recoup is for streamlines. There is no recoup rule on cash outs. I'll write that up here in a minute. Recoup, IRRRLs have a recoup. Cash outs do not have a recoup. We'll get into cash outs when we get into the net tangible benefit. So you must recoup your closing costs in 36 months. Here we go. A lot of people right now are streamlining. If you haven't streamlined, if your interest rate is above 3%, you should look for a streamline refinance because we have loans down in the low 2s for 30-year fixed. So let's just say someone's at 3 1/4 and they can drop the 2 1/4. That's 1 point off their interest rate, and it's going to cost them $4,000 in closing costs. Man, this is where I'm going to have to go get a calculator. I don't want to get a calculator, so what I'm going to do is I'm going to make it even easier. Well, no, this will work. Let's just say they're saving $100 a month. If you take $4,000 and you divide it by your $100 a month savings, here we go again with the pause, how many months is that? 40 months, okay? It would take you 40 months to recoup that $4,000 in closing costs, and the VA is not going to let you do the loan. Now you may say, wait a second. I'm going to be in my house for 6 years, 10 years, 40 months is only 4 months over the VA's rule, and you're telling me I got to walk away from $100 savings? That's not what I'm saying. What I'm saying is low VA rates is going to have to come in here, and low VA rates is going to have to lower your closing costs somehow to something that recoups in 36 months. Maybe we just give you a lender credit, right? Maybe we say you can't get 2 1/4, you're going to have to get 2.375 because the closing costs are going to drop to $2,000, and now your recoup is 20 months. Okay, so we're going to wrap it up there. This was simple math today. The first change with VA refinances on an IRRRL, you have to calculate your recoup. And if you recoup within 36 months, you got the green light from the VA. You certainly have the green light from us. There are some other things to determine and to, I guess, look at, and we're going to talk about those in a couple future videos. Thanks for watching.